A splendid evening it is to viewers. Welcome to Equity News on Equity Access, your area of perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast live from our Hampton studios in Harare. I'm Ibn Mabunda. Let's go. On news tonight, Econet's Distributed Power Africa today launched a solar power plant in Willowville, Harare. Distributed Power Africa is a sub-unit of Econet with a focus on green power generation in the country as well as in the region. Early 2018, Econet announced that through DPA, they had committed over $250 million towards solar power systems. The Willowville Solar Project is DPA's sixth project in an investment of $23 million in Zimbabwe. The solar plant is expected to generate 180 megawatts of power annually. Zimbabwe produces 1,100 megawatts of power while consuming between 1,500 to 1,500 megawatts. The deficit there, which is about 400, being supplemented through imports from Mozambique as well as South Africa. DPA Chief Executive Mr. Maharajan called for cooperation between government and corporates to come up with green solutions to the country's power needs. Our Equity Access team was on the ground. Let's have a look.
We believe this distributed power is the future of energy, and that's why the name Distributed Power of Africa. Just to give you some statistics of Zimbabwe, we have 1,100 megawatt consumption, and the production is 1,100 megawatt, and the consumption is anywhere between 1,300 to 1,500 megawatt. So there is a net deficit, and we import from South Africa or from Mozambique at different points anywhere between 50 megawatt to 300 megawatt, and it comes at a 4x. We believe that we corporates, if we join hands, if we really make the sun work for us, we can put solar panels on our empty roofs, on our grounds, on our carports, and then we can have this deficit. We can be self-sustainable, we can produce, we can eliminate some of the power challenges which we have. Also, at this point in Zimbabwe, we have 30% of industry utilization. I believe that as the industry utilization goes up, we'll have severe power outages. We are seeing the phenomena in our neighboring countries, in Zambia, in Ghana, and in South Africa recently. South Africa is the flag bearer of solar revolution, but in Zimbabwe, we call Harare a sunshine city. So let's make sun work for us. So DPA, under Econet group of companies, we have already started this journey of going green, going clean, and having sustainable power. Till date, we have done around 15 projects across Kenya, South Africa, and Zimbabwe. We use some stats of this Willowville plant. This is 466 kilowatt of plant, and it will produce 780 megawatt hours of energy every year.
In other news, it's 16 days into the tobacco selling season, but it seems as though that the current averages of deliveries are below the past averages that have been recorded in the particular sector. There are issues there with regards to how farmers feel with regards to the pricing that we actually have in the sector. Latest figures show that a total value traded amounts to $11 million, which is 81% below prior year's performance, while volume is down 70% at a current level of 6.3 million kilograms. Average trading price sits at $1.64 per kilogram, which is 37% weaker than the prior year trading price. Meanwhile, the percentage of rejected bales has scaled 28.7%. Generally, there's dissatisfaction from tobacco farmers who feel that this year they have not been so well handled. This comes against a background where farmers in the 2018 tobacco selling season, they received their payments 100% in US dollars plus a 10% incentive through bond notes. Currently, they're getting paid in RTGS dollars for the full amount with an option of applying for payment of up to 50% in US dollars. Well, our Equity Access team engaged some of the farmers to get information as to how exactly they feel about the situation as well as their concerns. Let's have a look.
Exchange the rate irikuiswa nebank it's not satisfying because haisi kumita that one which is in the black market. Black market ndo kwatinotenga zvinhu zvedu, but the rate iriko kubank haisiyo iri kublack market. But isusu kana takutenga zvinhu zvedu tikutenga kublack market, of which kublack market exchange rate iriko iri above 4, 1:4, whereas bank according to the RB ZCDC 1:3 point something.
Inini ndiri murimi ndakakontraktwa but mwaka uno matengerwo ari kuitwa foja hayasi kutifadza varimi. Mwaka wadarika takatengerwa foja zvakanaka, nyangwe zvazvo zvanga zvakaoma, asi mwaka wadarika takatengerwa foja zvakanaka kudarika mwaka uno. Mwaka uno takwara kana kudzokera kumunda hatikwanise kudzokera
nekuti last year this time $5 anga asiri nhamo, but this year tikuona $30 kwese auction zvese ne contract yacho zvingori zvimwe chete, hapana chakasiyana.
Ini ndiri new farmer wetobacco. Ndakatanga this year ndatanga kurima 6 hectares dzangu kuBeatrice, ndarima 26, saka I was wishing ndichaona something zviri nani. Ndichataurwa kuti tiri kupiwa 50% forex, but tiri kusvika panapa kunzi nostro account haina basa. Apa takatovhura FCA account, saka mari yese iri kuuya iri muRTGS. Mainputs ari kudhura, mishonga, kutenga mishonga kubvira paplanting chaipo zviri kudhura, transport, everything zviri kudhura, fuel. Saka we don't know kuti todzoka kumunda here next year.
Saka rinoteera mungarima here fodya?
Ndotombofunga kairi katatu. I don't think so. Ndichaona kuti ndoita sei, but handifungi. Chances are very slim. Because ndizvo totorima muriwo, because bhanduru remuriwo riri kutodhura kupfuura refodya. Bhanduru remuriwo riri kutoita dhora, refodya harisviki ikoko.
Because unoona gore rakapera tainyanya mari yedu hayo yanga isina kunyatsoti, but ukatarisa kuti ndichiuya first day ndakatengerwa $5, $5.20, $4 because yanga yakatinaka ifodya yakaita sei. Asi nhasi unopa yanzi $3 ndobva yanzi yadhura, ndobva yadzorwa zvayo kunzi haifanira kuita $3. Handitunoona, but last year yakatengwa $5.20. First day fodya yakadaro imwe cheteyo, handitunoona.
Saka gore rinoteera munorima here fodya, uyezve muchakwanisa here kuti mukwanise kutenga fertilizer?
Fertilizer haigoni kutengeka vakaramba vachitenga mutengero iwoyo. Plus ndagara ndichitotaura kuti vakaramba vachitengawo mutengero iwoyo, ndisati ndatomboya nefodya yangu ndichinzwa nekuona. Ndandagara ndichitotaura kuti zvefodya regai tisiyane nazvo.
Exchange the rate.
Now let's just dive into the statistics so that we have an appreciation of where it is that the tobacco sector is actually coming from against what it is that we have playing out currently. Well, if you just have a quick look, you'd realize that since dollarization, the price of the price of tobacco has never dropped beyond the price of $2. Well, in 2009, as you can see from the graph, that was about $3.03 per kilogram. 2012, 3.72 per kilogram, 3.74 2013. Well, then there starts to be what seems to be a decline from 2013 then on. 2014 3.32, 2017 2.97, 2018 $2.75 per kilo, and today the price of a kilogram of tobacco is going for $1.70. Hence the outcry. Now, if you look at the production figures, there seems to be what is an inverse relationship between the price, the declining price vis-a-vis an increase in the kilograms or in the total output that Zimbabwe has produced over the years, moving right from dollarization, coming up to where we are at the moment. In 2014, that was 165 million kilograms. 2015, 152. From then on, there has been a steady increase. Then between 2017 and 2018, there has been a sharp increase there in the volume produced, from 185 million kilograms moving right up to 253 million kilograms. And of course, in the same bracket would be the number of contractors that have moved from 2010 12 contractors moving right up to 16 contractors that we actually have playing in the field. Now, getting on to the tobacco auction floors, particularly, you'd find that the price started at a price of $1.86, which then moved down to $1.43. At the moment, as I said, it's $1.70, an average there of $1.74 throughout. Cumulatively, the value traded, the volumes that have actually come through amount to 2.4 million kilograms in that regard. Then moving on to the contract trading section, you'd find that these are the ones that actually bring in more of the tobacco. Initially, there has been a slow start as the contract farmers were trying to get an understanding of the market, to understand the head or tail in terms of the pricing in that regard. And if you just have a look at the graph, you'd find that the price has moved from $1.89 right up to $1.77 at this present moment, while the volume that has actually come through has moved right up to 5.7 million kilograms against a value of 10.1 million kilograms. Well, this is how actually the story has developed on the auction floors, and it remains to be seen how the story actually develops as we move forward. Moving on to our next story, the Zimbabwe Consolidated Diamond Company, the ZCDC, says it has been granted permission by government to spearhead the establishment of a special economic zone in Mutare, in a development that will see the mining giant undertaking major construction projects to expand its operations. In 2018, government passed a statutory instrument on special economic zones, which effectively brings them into full operation. That, of course, would be statutory instrument 154 of 2018, which was gazetted by government on August 17 of 2018. ZCDC confirmed the latest development, which has been issued under General Notice 673 of 2019. Statement read, which says ZCDC has been mandated by the government of Zimbabwe to spearhead the establishment of a special economic zone in Mutare for the diamond, gemstone and jewelry industry. Well, for a conversation on these and other stories, I'll be joined shortly after the break by one of our very own investment analysts. Please stay tuned. Welcome back, viewers. I'm now joined in studio by our very own chief analyst in Respect Gwenzi. Respect, good evening and welcome to the show.
My pleasure, Eben. Good evening, viewers.
Fantastic. Let's get the ball rolling. Well, tobacco farmers appear to be disgruntled by the pricing that we actually have playing out at the auction floors. Well, I did, of course, indicate where it is that we're coming from and what seems to be a steady decline in terms of the pricing. But there has been that significant decline. At the moment, the average price is about $1.74. What is your assessment of the situation that is playing out there?
I think there are quite a number of theories that can be advanced against this. I don't think there's a Christable position that we can quite pin down to say this has been the main causative. In terms of the in terms of the quality of the crop from the just past season, it is understood that the quality is weaker because of the rainfall patterns. There were late rains and they were not adequate to drive the leaf quality to the levels that were previously there. So obviously that's a discount factor to the value that can be derived in terms of sales. Then when you look at the global demand, on another note, you realize that there's been quite a slowdown. If you look at markets like US, they have been disincentivizing the people from consumption of tobacco related products such as cigarettes. And when you look at China, which is the biggest market as well, it has also been moving towards trying to implement such policies as well. So I believe that there's been a slowdown globally, which definitely has an impact in terms of weighing possible prices that can be earned. So when demand is going up, you also realize that price actually, in fact, when demand goes up, prices also follow suit, and there has been a reverse trend in that regard. When you look at most of the developed nations, they've been cutting back in terms of their consumption of tobacco-related products, and it means on the outlook you would definitely realize a value loss in terms of the actual realizable values. But when you come back home now to look at fundamentals that are driving our own market, if you look at the dynamics around RBZ and the merchants, who are the guys who bring in money, which is then expressed on the markets, there might be a possible collusion. RBZ, as a recipient of the first monies that come before the selling season, might be conniving with merchants to try to manipulate the market, and that can obviously also lead to weaker prices. But that's just a theory, because it's not a statement that the bank acknowledges. But generally, some of these dynamics are far much broader. They are beyond what merchants can control as well. So coming to the market and then claiming that the average prices come off by a very huge margin, which I'm not entitled to. I believe there are market forces that determine that determine the prices, and I believe our current market is also adhering to such dynamics, and it's a difficult thing to take, given that the average prices from all these past years has been relatively firmer. But I think farmers are more disgruntled because the payment modalities have changed. They've shifted from a purely USD payment to a partial, in fact, to a full RTGS or partial payment in USD. And if you look at the model, in fact, in terms of how farmers, the farming model, it's more like you sell your produce once off, say in April, like now, and you have to spread the earnings throughout the whole year up to the next farming season. And you also have to invest when the next season starts. You have to also employ people who help you with the land and all
right.
that.
You have moved on to the costing model that the farmers actually have to engage with. Right now, we have a situation where we have disgruntled farmers. And bearing in mind that tobacco was our second largest forex earner for the year 2018, raking in just below $1 billion, which of course was second to our largest earner, which was gold for of course the previous year. And now farmers are coming in to say, in terms of the viability of engaging in farming of the products, I had a conversation with a couple of farmers, some of them saying that, look, we have a situation where a bundle of vegetables is actually selling for more than a bundle of tobacco in that regard, and they're bringing in a whole lot of complaints, and some of them even going to the extent of saying, look, in the next season we're actually going to engage in the farming of things like tomatoes and not tobacco anymore. Now we have a crop that used to perform very well, which is the cotton, which was raking in about 150,000 tons of cotton, and now those figures have actually plummeted to about 30,000 tons. Now my concern is, are we not likely to see a decline in terms of the tobacco output in the next season?
That can be a likely possibility. That can be a likely move. But then I believe that every market, for every viable market to work, there have to be fundamentals. If your fundamentals are right, then you can't force them. You can't push any party in this case. If it's a merchant, these are people who are there to maximize profit. They can't subsidize your farming just for the country too. It's only the motive of government to do such, but it's coming at what cost? If you are crying that government is going all out to subsidize farming so that they keep on, so that we maintain certain production levels, and it's the cost to the fiscus and money supply and whatnot. That means we also see the negatives of them intervening with market forces. So I don't believe it's. I think it's quite fair, your assessment, to say this might result in a production loss. But if you are not a viable tobacco producer, then we ought to scale back. I believe free forces, market free forces, have to be at play. We are basically a price taker in this case. 3% of global supply. That's what Zimbabwe is to the world, at 253 million kgs per annum. And that means we're a price taker. We don't control that market. And if we don't control, then you have to match your costs to prices that may come along the way. And it's most likely that global demand might keep on slowing down, especially from developed nations. And that means we basically have to be more efficient in terms of our production. We have to reduce our costs. We have to find the best way of maximizing our production lines. So it's another thing to suggest that production might come down. Yes, it has to come down. I mean the value loss year on year, 275 to $60, $70 thereabout. That's a loss of
that's
almost
quite significant.
That's a loss of almost 45% in value in just 1 year. Whereas when you look at 2013 to 2018, that's about 25% in over spread in over 6 years. So obviously farmers are bound to be disgruntled, but the mathematics of it, the economics of it is not pointing to viability at the present moment. But I wouldn't know what their cost structures look like, but I would want to believe that in any kind of business you look at profit maximization, and that's what merchants are doing, and that's what farmers should also do. If it's not a viable crop, then you can't force yourself to get in there. If government believes that it's more beneficial for the economy to subsidize farmers so that they have to push more flows to them like they were doing in the prior year, where they were giving them 10% plus their earnings in USD, then they have to do that consideration. But such subsidy measures have not really worked for Zim.
I realize. Well, it remains to be seen how the story actually plays out, but it doesn't look so well from where it is that we're actually seeing the situation playing out. Now, moving on to our next story, which was, of course, the Zimbabwe Consolidated Diamond Company says it has been granted permission to establish a special economic zone in Mutare. What is the significance of this, as well as what is the implication of that particular move on the part of government with regards to the players in the mining sector?
I think if you look at the dynamics around special economic zones, a special economic zone is a designated area that government may pick out from the rest of the regions to say, let's have a certain area where we put in tax exemptions or tax whatever forms of luring investment within a certain sector. If you look, for example, in terms of, if you look, for example, Victoria Falls, it has been designated as a special economic zone in order to attract investment. People who are bound to be building, to be constructing hotels and some other infrastructure within that area are going to enjoy some tax breaks and so forth in terms of what they will be undertaking in that respective region, up to a certain level of investment, so as to boost inflows in terms of tourism numbers. And obviously tourism is earmarked to be one of the key growth drivers for Zimbabwe's GDP going forward. I'm sure they're looking at creating a $10 billion sector from just a basic $1 billion. In 2018, they made about $1 billion from tourism. So they're looking at a $10 billion industry, in sector. So when you look at Mutare houses, it's part of, it houses a key mineral, which is the diamond. And diamond has been underexplored. There has not been any significant investment since its discovery in about 2007, 2008, thereabout. The only minor investments that were there were with a few individual companies, which later proved not to be viable because of the amount of the earnings that they were generating and the income that they were even generating for the country. So in the current setup, we find a government which is trying to lure investment into a certain sector, and this sector is highly concentrated in Manicaland. That's within the diamond sector. And so they want to create a zone within the mining side of the Manicaland region and give investors tax breaks so as to when you look at taxation, the way it's modeled around mining, there are royalties, so those can be suspended. And there are also issues to do with policies, indigenization. They might consider exemption, because if you look at indigenization, there were only two minerals that were reserved presently. That's diamond and platinum. So we might see maybe further relaxation of legislation of policy in terms of indigenization as well, so as to attract capital. But my own assessment in terms of how effective that model is, when you look at most of the countries that engage in special economic zones, it's out of the realization that there has been incapacity on the part of the nation which holds a certain resource to exploit it or to develop it in a way that it can earn an economy favorable returns. For example, if you look at how most of the Gulf Persian nations are designed, they are oil-rich countries, but they're not economically active in other industries. So what do you do when you're operating in a desert kind of setup? You try to lure investors. For example, if you look at Dubai, most of the sectors are basically tax-free, so as to attract investment, because there's no much investment in other areas such as construction and whatnot. Lately, they've now attracted those flows because people feel that it's cheaper to undertake business in such a tax-free economy. But within the key sector, which is the exploitation of the oil resource, they have reserved a majority stake and partnered a few of the international guys. So I don't believe it's ideal to pick out a key mineral, a key resource that you know that is going to push the economy forward, and you subsidize its production or its exploitation, like what we are trying to do with our own diamonds. I believe that there are certain areas which we don't anchor our economy on, that we might push within the special economic zones. If you look at Victoria Falls, I think it's quite fair because we still need to develop that sector. But when it comes to gems, I don't feel that that's the best move for Zimbabwe, because we tend to lose money along the way. There are other ways of partnering international players without necessarily giving our resource set a song.
Well, I tend to agree with you there that somewhat the zoning needs to be a little bit more articulate. I mean, we can talk about other countries where we have seen such things actually play out. We can talk about China, the Shenzhen region, which has actually turned into a multi-billion-dollar space. Well, the list, of course, goes on and on, but we're just going to have to take a break. And when we come back from the break, we'll have a look at Markets Daily with Anesu. Please stay tuned.
Welcome back, viewers. In this show, we look at daily market updates, and I'm joined by Anesu Chumbumu, who is our investments analyst. Welcome, Anesu, and good evening.
Good evening, Respect. How are you doing today?
I'm doing just great. Let's look at markets in terms of how we performed. We'll start with the stock market. If you can just give a brief background.
All right. The market has been coming up for the past 3 sessions. Now today would be the 4th session on a positive run. with the all-share index adding about 0.35%, while the industrials index added 0.36%, for it to settle at 417.06. Now the minings index did let up 0.57% today, consequent to a Bendronico counter decline there, which had the index settling at 191.3 points. The top 10 index had a marginal increase today. The difference between it and the other two indices, which are namely the all-share index, the industrial index, was a little bit slimmer today as compared to the past couple of sessions, though it is still leading in terms of the movement of the market. Now, Old Mutual also still on the same run. Yesterday I did mention that Old Mutual held about 64% worth of the value that was traded on the stock market. Today again holds the top spot, but then only contributing about 56% to that value that was traded. Okay. So I would suppose that the market seems to have a lot of investors looking to move into your Old Mutual counter so that they can move their money out, since they're pretty much holding most of the value that counter has, most of the value that is being traded on the stock market.
Okay, I think before you move, let's try to take a divergent approach in terms of how let's engage our viewers and possibly try to express a bit in terms of how our indices are arranged and what they actually mean. Because on a day we do give them the out 10, but I think I'll start with the ZCDC all-share index. On our index, on our stock market, we do have 60 active counters. And out of those 60 active counters, they are indexed, or they are weighed, or they are aggregated to give a certain movement, to give a certain, they're weighted and they're aggregated so that they can be measured in terms of whether they move up or down. So if a counter goes up, it's measured against its weight on the index. And so when we have the all-share index, it's an aggregation of all the counters that are on the stock market. And when they generally move in one direction, the stock market will then be captured as having moved in that respective direction. So as Anisef just said, the stock market's ZCDC all-share index, which is a measure of all the 60 counters, it went up 0.35%. And this does not mean there were no fallers. Actually, there were fallers in the session, which included the top cap counter, Econet, and obviously Insco as well. And the industrials, it's a disaggregated index which looks at all the counters minus the mining stocks. And of course, the minings, it's a weighting and an aggregation of 3 mining companies that are listed on the stock market. The fourth one is currently under suspension, and that's Falcon.
Yes,
so we have got
yes.
3 mining counters, which are
Reozim, BNC, and
Wange.
Yes, exactly.
Sure. So they give us the mining index, which was down 0.57. And the ZCDC top 10, this is an aggregation of the top 10 counters that are to my right, and these are from Econet down to Citco, and these usually dictate the movement of the general market. But I think of note, I would want to look at Insco. Insco is parent to Nat Foods, and yesterday government gazetted producer prices as well as a subsidy to millers. And this has got an impact on some of the big players on the market. We are looking at Delta, which uses a bit of sorghum in terms of their production. Of course, they also use maize. They're a player in maize. And we're looking at Insco. They are also a big player in that space. They are invested in Nat Foods. Of course, Nat Foods was stable today. But I think we want to look at the dynamics around what this whole new price regime would mean to Insco, to Insco and its subsidiaries. Maybe your thoughts on that?
Well, the price regime was going to really be a heavy hitter on companies like Natfoods, because with the increase in the price that was supposed to be, the increase in terms of the money that is supposed to be paid to farmers, that would mean more costing to the millers, which are your Natfoods. So now the government also has put in a cushion in terms of that cost by putting a subsidy of about 38%. So that should sort of reduce the inflationary rate that should come in, but then still that inflationary rate can come in because of money supply implications that could come with subsidies. Now, Nat Foods has that cushion in terms of the subsidy, so that should give them some breathing space in terms of their costing. We shouldn't really much affect
let's try to break down. Let's try to break down the numbers here. We've got maize, which the producer price has been set at 726, right? And when you're looking at the import parity price, it's 250 or 240 $250. If you use an exchange rate of 3 times, it would give you a price of 720. So it means to import maize into Zimbabwe would cost a farmer, would cost a miller close to 720.
Yes.
Now we have a situation where we have produced 800,000 tons in 2018, and that's going to be sold to GMB, and GMB is going to pay 726, and GMB is going to express the same to millers at a subsidized price of about 445 thereabout, which is about 38%
less.
38% less. Where are we coming from? We are coming from a point where a miller was paying the import parity price previously, which was 250. So millers were getting this same produce at 250 from government, and their price has immediately moved to 440. And when you look at the difference between 440 and 250, that's a cost increase to the miller. And where is that cost gonna go? It's gonna be expressed to the consumer.
Yes.
So that means a price increase.
Yes, it's actually.
And when you further push the dynamic upwards and say, what's the volume that we are not gonna sustain on ourselves? So we've got 800,000 tons, which is the expected production from the 2018-19 season. And then we've got 500 in strategic reserves.
Yes.
And when you add the two, that's about 1.3. And our national demand is 2 million. 2 million. And when you less 1.3 from 2 million, you are left with 700,000 tons. And where is that 700,000 tons going to come from? It's going to be individual millers who are going to be licensed to import. And at what price are they going to import? They're going to import at 700. They're going to import at 700. 720, as you've rightly said. And they are coming from 250
to
straight up to 720 for the remaining 700,000 tons. Whereas on this other 800, they're coming from 250 to 400 to 440. So there's basically a huge. It's not a price cushioning as you would want to believe, because this is a price increase, and this is another huge price increase just for maize. And the same dynamic goes for wheat.
Soya.
It goes for soya. So we're gonna find a lot of our basic produce. They're gonna be affected by this huge price movements. Whereas if on the other hand of government now, if government is to play a hand, overall this is going to cost them anything between 3 and 500 million. And that money is typically unbudgeted for. And what is it? Where is it going to come from? If the money is unbudgeted for, then you have to find ways. And what's the ways? It means borrowing. And when you borrow now, that's when you affect money supply. And when money supply is up there, it means our quantum of USD cannot meet the same, and we might see another
weakening exchange rate
and price